All right, what's going on, guys? So I'm just gonna make a quick update video. So obviously, we finally got my target of 550 for the SPY, the S&P 500 to the penny. So that's exactly where we went. In my last video, I told you guys that if this week that we just had was not going to be strong enough to push us back higher, we would most likely have another 5% correction. After warning you guys since the beginning that most likely we were gonna have a 5 to 10% correction. And here we are, guys. We now finally got my second target for this correction. And I just kind of wanted to reiterate what I told you guys, that I was expecting this pullback, but then I'm expecting basically a V-shaped recovery to the upside on risk assets on the short to medium term. And obviously right now you can see that the S&P 500 has had a beautiful bounce at this key level of the MA layer model. Also Solana, we got my target. My target was 113, 114, and that's exactly where we bottom basically at this key level of the smart layer model combined with the MA layer model, which by the way, stick around guys, I'm gonna give access to you guys to some of these trading view indicators completely for free. In the next coming weeks, I should be able to set up something for you guys, so stick around. Also, we're gonna look at Bitcoin, what's going on. Obviously, on the medium term, and the short term, the trend is obviously down. I'm still expecting a nice bounce to follow the rest of the market. If the S&P 500 does have a nice V-shaped recovery to the upside of about 5%, I would not be surprised to see a nice 10% bounce in the price of Bitcoin. So for Bitcoin, I told you guys that if the market was going to continue going lower, we could go as low as 70,000 in this ballpark to then have a V-shaped recovery, and that I did not think that Bitcoin would breach this level. So right now we're still below a key smart layer model, and we're having a hard time breaking above. We're still below this 97,000 key level. I told you guys also we needed to stay above, and if not, we could still yank back to these levels. So we'll see. But if the rest of the market decides to have a nice leg up, Bitcoin will follow. So at the moment, the fear and greed is at 21, which, as I say most of the time, it's a good time to sell cash secret puts when the fear and greed is at extreme fear, and to sell covered calls when we're at greed or extreme greed. But obviously you can't just take trades based on sentiment. So I'm going to show you guys other reasons why I am expecting a nice short-term bounce. Alright, so I'm going to introduce a concept that is pretty advanced that I'm not going to go too much in detail, and I'm going to try to use Lehman's term here. So this is the skew of the VIX. Alright, so I highly recommend you just use AI to just figure out what this is. Keeping it super basic here. When you want to know when a correction is close to being over, obviously you're going to look at the VIX, which is also known as the fear indicator. But a lot of people, they just look at the price of the VIX and, oh, okay, well now the VIX is down, 8.9%. So that means that people are buying less puts and are hedging themselves less. So now I'm going to buy stocks, right? Which logically, yes, that is correct, but you can't really trade like that. And there's a better way to look at behind the curtain to see what's going on with the VIX just by looking at the skew. This line right here, this yellow line, and I apologize if it's a little bit confusing, but that yellow line is the line of the skew of the present day of the VIX, right? And when we have a correction, that skew always steepens above the skew of yesterday and the past week. So those two lines there basically. So hopefully that makes sense. And the point is, at the moment, the skew of Friday finally dropped for the first time since the beginning of this correction below the skew of the past week once we started this aggressive downtrend. So this is one of the reasons why on the short term, I am expecting this bounce to finally have a little bit more leg to the upside. And then combining that with a smaller time frame for the S&P 500, you can see that we basically hit a third standard deviation. And the means is the middle line right here, which basically is 5.3% higher than where we currently are right now. And this is one of the reasons why, based on sentiment, probabilities, and the skew of the VIX, I am expecting this rally to most likely continue to the upside a little bit, and I would expect it to be quite aggressive. And also, if you look at the oscillator below that I coded with AI, that's basically a mean reversion of the momentum. And you can see that obviously we're extremely oversold based on mean reversion, and so that we should have a nice bounce to the upside, but then again, that's short to medium term. So if you guys recall, I still told you that medium term I'm still bearish, and now I am also bearish long term because of a very simple indicator I like to use on the S&P 500 to let me know in what type of environment we're in. Are we in a risk on environment or a risk off environment? So the indicator I like to use, that's the simplest strategy I personally have found to just know what type of environment we're in, is the good old MACD on the monthly time frame for the S&P 500. At the end of the day, the S&P 500 will move everything. This is why when I'm looking at an entry point or a stop loss for Bitcoin and crypto and risk assets, I don't look at the price of Bitcoin. I look at momentum on the S&P 500. So hopefully that makes sense. Right now, I was not expecting the signal to trigger this early. You guys know that I have been talking about entering a bear market before the beginning of this year, so this shouldn't be a surprise to you. I was expecting it based on the presidential cycle. I like to trade, and typically based on the presidential cycle, the midterm year tends to be a weak year for the broad stock market, and then it always ends up being a beautiful buying opportunity. So personally, my base case was that we would enter the bear market, somewhere early in 2026 and bottom somewhere in 2026, a couple of months later. And then my bear case was worst case scenario in my head. I thought, okay, well, maybe we're going to enter in Q3 or Q4 of this year. So we would front run the midterm year, if that makes sense. And then we would bottom somewhere in Q1 or Q2 in 2026. But at the moment, the market seems to have a different opinion. It seems like the market wants to front run the presidential cycle. So I was not expecting to receive these signals early. You can also look at the cloud trend right here that I'm coding with AI. It's not done though, but it's pretty good at telling you when we're in a risk on environment and a risk off environment just based on the cloud and the momentum. And right now, as you guys can see, the cloud turned blue here. So when it starts turning blue right here, and it warned us basically in January that the trend was over, and now obviously we had this big 10% correction, and it basically warns us that the trend is at the moment neutral, which is not good. That's definitely not something you want to see when you're still supposed to be in a bullish environment. And you can see that it's pretty good at kind of telling you to leave and to basically tell you, hey, momentum's about to shift. And then obviously we're at very high upper standard deviation ranges also on the monthly time frame, which is never a good sign. And we now officially have what I like to use as my dead cross, which is very simple. It's just the MACD on the monthly time frame. And then I like to put 10 and 20 settings to have more leading indicators. And right now, that's kind of my problem. It seems like the market has now decided to enter a risk off period right now as we speak. And so this is why I got stopped out of crypto. What I mean by getting stopped out is I was forced to take profit. It sucks. I'm not happy about it, but I need to respect my stops and my risk tolerance. Hopefully I'm wrong and you guys can clown me, but at the moment it looks like we're about to enter a risk off period. And so for Bitcoin as well, guys, I'm very disappointed. I hope I'm wrong. I am expecting a nice short-term bounce. Bitcoin basically is going to follow the S&P 500 and the NASDAQ. Obviously, if you only have a couple of percentage in crypto, that doesn't matter to you. This is more for people like me that are degenerate and had a schnizzle ton of size in crypto, right? I had to take profits and, I'm happy I did, So what if I'm wrong? The answer is super simple, guys. One, it's all about the S&P 500, and then two, it's about understanding what the Trump administration wants. And at the moment, the big problem for risk assets is the 10-year yield, guys. So this is the 10-year yield of the US government bond. And as you guys can see, we're still extremely high. Yes, we did go down. That's a good thing. That's what the Trump administration wants. But if you think the Trump administration wants rate at these levels, I don't think you understood what they meant, right? And I've been paying attention to what they've been saying, and clearly, and I'll be very conservative here, I'm going to say that if we don't minimum go to the low 3% on the 10-year bond of the US government, I do not think the Trump administration is going to be happy. And we're still at 4 point something percent, guys. So we have 1% lower to go. And as you guys can see, it's having a hard time going down, guys. So until we get to these lower levels, I'm expecting the Trump administration to continue creating a lot of volatility in asset prices. All right, so that's the second thing I'm kind of looking at. It's very simple, but I do believe that now you should keep an eye more on rates than the price of Bitcoin. I will continue expecting a lot of volatility until we get lower rates. So if that's the case, obviously risk assets are going to have a hard time, in my humble opinion, for the next coming months. Listening to the Trump administration, they seem to want to be front running the presidential cycle. So that's kind of my point here. But my timing maybe is wrong. And maybe we're going to start, in the next coming month. And 2025 actually is going to be a painful year. But then the good news is we're going to have 3 beautiful years after. So obviously they're not going to continue doing this for the entire term of Donald Trump. I do not think so. But on the short term, they've been very vocal that they're okay with some pain. And what if I'm wrong, right? For Bitcoin? Well, it's super easy, guys. I'm just going to look at momentum. At the end of the day, Bitcoin and Solana, they're all momentum plays. And you can see that you don't need to be pinpointing the bottom to make a lot of money in Bitcoin. You just need to re-enter when the trend goes back bullish. And right now, we're still neutral on the monthly. And then you just combine it with the weekly as well. And you can see that on the weekly as well, we're still in a red cloud. It doesn't mean we can have a bounce to 90K, which I am expecting, by the way, if I am correct on the short-term bounce in the S&P 500. All right, so hopefully this helps, guys. Hopefully I'm wrong on us entering a cyclical bear market. But right now, everything is pointing towards a risk-off environment. So I would be very cautious with risk assets. And I believe that the next bounce we're going to have most likely is going to be used as exit liquidity by institutions, because the momentum on the monthly is negative now, the weekly still negative. That's how I was able to tell you guys to be cautious before we had this big pullback in the market. Usually I always say it's a great time to buy the dip, but right now, obviously we're entering a risk off period, in my humble opinion. Hopefully I am wrong. Also looking at the 6-month trailing Sharpe ratio of the S&P 500, we're extremely high right now here, guys. So usually when you want to be buying the dip, right, you want to be at least in the half lower range right here of the Sharpe ratio. And at the moment, in my humble opinion, looking at the environment we're entering and the fact that everything is pointing towards a slower economy, because the Trump administration basically wants interest rates most likely in the low 3%, and none of those have happened yet, right? So this is why the volatility will stay with us most likely for the next coming months. So just stay alive. Don't try to be a hero, right? Yes, on the short term, we're going to have a nice bounce, probably high probability, but bigger picture, be careful getting caught thinking we're going right back into a bull market. There is nothing right now telling me we're in a risk on environment anymore. So hopefully that helps. Afterwards, it's going to be an amazing buying opportunity. Just to be clear, it's not the end of the world. But right now, there is nothing telling me that I should be taking a lot of risk with risk assets. So hopefully that helps, guys. Take care. God bless you, and see you in the next video.